It looks like it's confirming more now than ever. We're now moving into a recession. What can you do to protect your money and make sure you have these recession resistant investments right now? Tune in. Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti financial advisor. This show is for you. You work so hard for that money, and you're now ready for that money to start working harder for you today. You don't want to wait 30 or 40 years from now, but you want to become work optional, where you work because you want to, not because you have to. How do you do that? Because you have enough passive income coming in to be able to pay for all of your family's needs, allowing you to be freed up, not to just get rich, but allow you to live a rich life. Because as you have greater resources and means and money and wealth to do so, you can create a greater ripple effect through the lives and bless more people. That is exactly what we're here to do today. Thank you for allowing me to create that ripple effect and tuning in. You guys are binging as always. And by the way, thank you for sharing these episodes. And just as a little ask, if you love this show, heck, even if you just think it's pretty interesting, please refer just one friend to be able to one of your favorite episodes or even just find the show online. We love it because this ripple effect cannot happen without you because more and more people's lives are being blessed every single day. All right. So speaking of ripple effect, I want to do a shout out. I just got a text from a friend who this guy's a kind of a big influencer, especially among chiropractors, and he's just like, "Holy cow!" Like, man, like you guys, and especially he was referring to our coach. He was just like, "Man, like you guys are like like geniuses. You're like rock stars, and and of course that's not because we're just simply amazing, although we are in a lot of different ways, just like you are too." But the thing that's really cool about it is that that obviously we're working in our zone of genius, right? And the great thing is, like, he did the calculator. Guys, if you guys have not tried the passive income calculator, dude, it was like multiple six figures a year of passive income was possible in his situation. I think that's part of the reason why he was pretty thrilled because it was like, dude, like you've got plenty of resources to make just a massive amount of passive income. I mean, I'm talking about like getting close to $1 million a year passively. That's so cool. So, anyways, really appreciated, that he sent that text, and we're getting those kind of messages all the time. And it leads us to believe that, I mean, again, everyone wants the passive income. But right now, I'm seeing so often people are like, okay, things are changing. There's tariffs, there's possibility of recession, or really now we have confirmed that there's a report now that we're had the first decline since 2022, which was the last time the market tanked about 20 plus percent. And we saw a little, it kind of became like a little, I don't know if it didn't really become a recession, right? It was a little dip and then it popped right back up again. Generally, they say recession or when you have 2 quarters in a row of negative GDP, right? And they said the biggest reason for the GDP was, of course, that spending decreased. And because of the tariff scare, people hyper ordered, like these companies would order lots and lots of extra inventory just in case there's going to get slapped with a lot more. So there's a lot more imports than we exported that affected the numbers. Now, that's true. Now, the question is whether that inventory is going to really unload or not, right? Is that really going to be something, or are they going to just be holding on to that stuff and people are also going to hold on their money? And there's a lot of fear. And here's the problem is that when you're in fear, often some people do, fight or flight, right? But I find with money, people often freeze. And if you start freezing with your money, this is when things can go wrong, right? It's I believe it was Will Rogers. He said that like you can't just stand there. You got to get off the tracks, right? Because if you stay on the tracks, you're going to get run over by a train, obviously, right? That's the thing. And so you can't just stand still. You got to get off the tracks and move. And that's definitely the case. And so the question right now is when we talk about these recession resistant investments, right? What are we going to do? And I want to talk about really like what things you should be doing to prepare your finances for a recession so that you feel confident. Because when you feel confident, you can make better decisions. And when you also are making better decisions, you're the one that looks like a genius coming out of recession. Most people are reactive. Most people aren't proactive. Most people end up taking big risks or they do nothing at all and then they lose a lot of money and then they become even more depressed, right? And this is what makes a recession even last longer and get stickier. And just so you know, most recessions, at least, this is not talking about stock markets, recessions might last a little bit less than a year. It's not like it's a very long-term type of thing. Again, recessions are debated about what do you really consider a recession. I think in many ways we've been in a recession since post 2020, right? I mean, 2020 was like the little mini recession. Like they had like one little, like one or two little quarters there, and then it popped right back up, and then it just boomed, So it almost seemed like a fake, kind of a fake out for a recession. I really believe we're overdue. Just so you know, usually every few years there's a recession, right? At least every 5 to 7 years, you'll see something like this, which is why about every 5 to 7 years, you see the market tank, which we haven't really seen, right? And so the thing is, when we're looking at recession resistant investments, and I'm going to talk about that here right now. And this even includes like if you've got money in the market, or there's some things you could be doing, especially if it's just locked up in a 401k, you probably can't do some of these investments that we talk about here. But there are some things you can be doing to be proactive right now. So I'm going to give you some tips currently to do this, to start moving and at least have some confidence to start making some moves that will help. Now, this will center around what I said back in 2020, right? When I started to think we were moving into a real deep recession, was this is get lean, get liquid, and get out. Now, you might have heard me say these words before, but I want to dig deeper into what that really means because this is the core of what works in any economy and especially works great during a recession or even during downtimes. So let's talk about get lean, right? Get lean, what does that mean? That does not just mean getting cheap, although that's part of it. But it does mean you got to make sure you're tracking your money. Be sure that you're on top of it. You're watching your money, you are tracking it. At best, the best ideal scenario is doing it weekly. But if you're not going to do it weekly, at least do it monthly. I would even recommend bi-monthly every few weeks just to stay on top of your finances. There are so many money leaks that can happen. People that can hack your accounts. You may never know have been drained from your accounts. There's other things too about looking at expenses. Say, is this really productive or not? Am I really using this? Is this really bettering my life? I'm appreciative that so many of our clients say, you know what, I especially want to keep you around now. Like many of them keep us on retainers, and we don't take that lightly because we want to make sure that they're on top of it and even ahead of the curve. So that's a big thing to do right now. So make sure you're getting lean. Cut the unnecessary waste. Really find ways to be a wise steward with your money. And the reason I say this is because if inflation keeps going up, they have what's called stagflation, where inflation continues, but the economy doesn't grow. And that means you don't get pay raises. That means that often people's belts have to get a little bit tighter. It's better to be proactive now to get tighter now than to wait. I made that mistake in 2007. 2007, I thought, you know what? It doesn't matter. I always find a way to make things work. I've got the golden Midas touch. It's great. And so my ego and my pride got in the way. And then by the time I finally started tracking my money, it was already too late. I was already hemorrhaging money left and right. Had I been more proactive, had I actually done really more expect the best, but still prepare for the worst, and then even during good boom times, I would have been in a much healthier position. So this is something that I would not waste away. This might also be too if you're contributing to a retirement plan. Maybe you're contributing to IRAs, 401ks, or Roth IRAs. If you have money that you're starting to put onto credit cards and things like that, stop contributing to those 401ks right now. There's no return, not even with the match that will ever match. I didn't mean to say make this sound redundant, but you'll never be able to equal what's going on, what's happening with high interest credit cards. And so if you're finding yourself getting really tight and your savings, your liquid savings is draining, do not fund the 401k. Funding 401ks and retirement plans to lock it away into prison away from you is not a smart idea. It's the same reason that I tell people don't lock extra money away by paying extra on your mortgage. Because again, you lock that money away into somebody else's hands, it makes it really hard to get to it. In fact, the only time that banks never want to give you money is when you need the money. So the best thing you do is do the second step, which is getting liquid. So again, free up the cash, get lean, find ways to do that. And by the way, we got great cash flow tips that we've done not just on this podcast, but even on our website, moneyripples.com. We have that ebook, Beyond Rice and Beans. Get a copy of it. There's some great tips of helping you get lean. If you really feel like you are paycheck to paycheck, you need some extra cash, go there. Now, get liquid, right? What do we mean by get liquid? This is the absolute core of what you need to do in a recession. I've been preaching this for a long time. Some of you guys have been taking action on it and you're feeling pretty good right now. Others of you might have procrastinated, either because life's gotten in the way and that happens for sure, or because maybe you just didn't take it seriously. Maybe you thought times were going to be fine and things would just keep humming along the way they always do. The problem is life is never that way. Life, the economy is always changing, it's always shifting and moving around, right? So that's the biggest thing you got to be aware of is don't get caught in the trap of thinking that things will always be the way that they are today. Things are always moving and they move at a more rapid pace. Just take the example of stock markets. Stock market trading is faster than it's ever been. Why? Because humans aren't even doing the trading. Very few are actually human trades. The vast majority of the trades happen in the stock market is all AI driven. It's all done by a computer, like literally like doing hundreds, if not thousands of trades within a second. Like transactions going back and forth all the time. Like bam, 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 happening way faster than even a human can click. That's happening right now. This is why we're seeing things go up and down so fast and moving around, right? And that's why you can get caught with your pants down, metaphorically speaking, right? Um, not it better not be literal, but you're getting caught. You're getting caught in this trap. So you got to be careful. So this is why you got to get liquid. You got to have cash available that you can get to. This is cash and savings, obviously. But here's the problem. Of course, if we have stagflation, right, where we start to see that interest rates on the banks aren't paying great, there are things you do like high yield savings accounts. By the way, I'm going to put a link in the show notes here that you guys can actually go to visit. So no matter, even if you watch this a year from now, which by the way, things can be different even a year from now. But if you're watching this, I do have a link that's good to use to find what's the best highest yield savings accounts each week. So it's kind of updated on a weekly basis. Great place to go. Now I'll tell you, I mean, right now you're not seeing much over 4%, right? I mean, that's pretty much about the best to expect. And remember, when you do a high yield savings account, just like all savings accounts, you're going to get taxed on that money. So, even if you get 4%, you might walk away with 3% or less after you pay taxes. So that's definitely a great thing you can do. And like I said, we'll put the link there in the show notes. Now, of course, we talk about infinite banking a lot on this, right? Now, the great thing with infinite banking, with the policies right now, are paying 6% tax free on that money. Now, of course, if you set up a brand new policy, brand new policies, you got costs up front. And so you're not going to see that 6% right off the bat. You're going to see some of your money go out to paying for those front loaded insurance costs, which we try to minimize as much as possible. So if you're looking at infinite banking, be sure to reach out to us also on our website, moneyripples.com, because we do actually do a much higher yielding type of account, not because it's higher dividend paying, but because we lower the cost more so that your money can grow better, right? That's important. We've had so many people lately, especially on the dental side. I was just talking with one of our insurance agents, and he's like, man, like I've had so many dentists that have gotten out of their bad plans, either with Northwestern Mutual or even like companies that are infinite banking friendly companies, like maybe it's like Lafayette, Mass Mutual, which is kind of half not friendly to infinite banking, right? And by the way, we write with these same companies too, but they're seeing that so often that these have been designed in a way that really are not giving them a good return. And so be able to save them sometimes, if not thousands of dollars a year, sometimes into the tens of thousands if they're doing bigger policies, that we're able to save them in costs and fees. So just be aware that that is a good place to store money. But if you're trying to set up a new one, there are definitely costs up front. But if you have an old one, that could be a great place to store more cash. And so I've had a lot of clients more and more say, hey, I already have one on myself. I'm already max funding it. Let's do one on my wife, or let's do some on my kids. Let's get some more of this money out there so that we do have some liquid cash available to pull a trigger on the right investments. And even not even on the right investments, sometimes just to have good available cash. I had one dentist tell me recently. He said, man, I wish, and he's in his 70s, he just said, I wish I would have had more money in my infinite banking policy. He's like, but I went 100% all in real estate, and some of it's paying, but some of the real estate deals I was in didn't pay. They didn't do well over the last few years. And so my income is suffering. And he's like, I wish I had more money in somewhere that was guaranteed, right? And that's the one thing people ask me about savings accounts and with banks. Are they guaranteed? Well, everybody will tell you have FDIC insurance, right? Where they say they'll insure up to 250,000 per person per bank that you have your money with. That being said, just to understand the FDIC has very little, actual little reserves themselves. So they're not prepared for a big emergency if there were to be some kind of bank failures, right? So just be aware that that could still be a risk. Where with the life insurance, there's a lot less risk. Insurance companies tend to fail a lot less often than banks do. So again, I'm not just saying this because yes, we offer it. We do that. The reason we offer it internally ourselves is because we haven't been able to find good, consistent guys in the infinite banking world that would write it the way that I would want to have it written on myself and my family. And that's what I think everybody should have, right? Everybody should have the same kind of thing. So that's a good way to get liquid. But again, that's not the only place to have it. Just again, having liquid cash. I don't care if you keep it in the bank, having liquid cash is important, which is why Warren Buffett has been building it up over the last year and a half plus now. If you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now. Now, get the money out. This is the last point. This is where we're getting to these recession-resistant investments. Now, let me go back when we were talking about investing, but let's go back to protecting your money too. Let's just say you have money locked up in a 401k. Do you keep it in the stock market? I think right now that's a very risky thing to do. Now, I'm not an investment advisor, so I'm not going to give you investment advice and where you should store your money. But if you are concerned at all about what about the money I have in the market? I had a guy today, he said, I've got a lot of money with Vanguard in index funds. And I said, this might be a good time to consider moving your money over somewhere safer. Now, a lot of people are recommending bonds right now. I'm not saying that bonds couldn't do that, but I tell you, I guarantee it, bonds are already under a lot of stress right now, and it might get worse. So just be aware that going into bonds is not always the safest place. It's safer than stocks, but bonds can lose money often sometimes at the same time as stocks. This happened in 2022. Stocks lost money and bonds lost money. It didn't matter if you had stocks or bonds, you lost money across the board. You might lose less with bonds, which that's what's happened with some people in 2022, and also in 2008 same thing happened then too. But, a simple money market fund could be fine. It could also be like a stable income fund. That sometimes they'll have the different funds are like income funds for they usually more set recommend it for like retirees. But that's a place that you might have a lot more. Maybe you'll have some in bonds, but it'll have a mix of treasuries, bonds. Treasuries is another one that could be a good place to store it too. By the way, in life insurance also that's where they make their dividends from is from treasuries. So a lot of times people are like, well, how to get treasuries? Like, well, you can buy them yourself and you get like the cheap okay cost, okay returning ones, or the life insurance companies are getting the premium yield treasury bonds because they have billions of dollars they can invest and they'll get paid more than you will by yourself. So that's one of the reasons why they make more money on that end than many people do when they just buy treasuries. So that's one thing to consider. So remember, you can move your money away from those accounts, and you might consider doing that just to preserve your capital. Yes, the market could go up, but it could also go down. And right now, there's a lot bigger chance of the market going down from where it is today than going up from where it is today. And worst case scenario, say it does go up. Okay, well, at least you preserved your money. At least you didn't lose anything just in case. And you probably still made some money. And by the way, I actually have a retirement type of fund that I have where I could buy into all these different things. I move pretty much almost all my cash into a fixed income fund. Like they would have a 4% yield fund. I was like, cool, put me in that. I'm not putting anything into those stocks. This doesn't mean I won't in the future, but if I'm going to put money in stocks, I'm going to wait for a big market crash where we would see losses like 30, 40 plus percent. Then I would consider putting money back in the stock market. This is just me personally. I'm getting, again, not giving you advice, but that's something to consider. Now, what are recession resistant investments? It's not the stock market. Stock market is like the worst place for recession investments. Now, people will ask me about REITs, real estate investment trusts, right? They'll say, well, that's kind of like real estate and it's liquid. You can move in and out. Well, REITs usually do better once the recession has already hit a bottom or it's getting down to a low. So when everybody's kind of freaked out already, people have already, just hating markets because they lost money. That's traditionally, and I say traditionally, I really mean historically speaking, that's the best time you're going to get into REITs. But right now, REITs are still like very overpriced. And especially with the way those companies bought real estate, it was horrible. They bought horrible, horrible crap in the last several years. So I would not trust REITs at all. Again, not giving investment advice. This is just my own personal opinion of what I'm predicting could happen. Now, recession resistant investments, what does do better? Here's the big question you should be asking. You should be asking the question of, what's changing in the market? Like, what's the new place to make money? Stop asking that, right? That's a bad question. And that's why a lot of people get burned. The better question you should be asking is, what's not changing? Now, I already mentioned, of course, that the world's changing and just accept that fact. But in the investment world, what's not changing? What's still something that people still need or want? Some people would say, well, hey, everybody needs food. And you're correct, you do. By the way, I actually believe in food storage. That's a great place as another additional reserve to have. Again, I'm always thinking ahead, like, what if somebody gets laid off? What should you have? Again, liquid cash is important. Multiple streams of income is very important, but also having things like food storage and that goes along with that emergency savings is very important. Now, when it comes to the situation like this, right, where we're going to recession, what's not changing? That's why I mentioned infinite banking, life insurance, right? Because whole life insurance isn't changing. By the way, index universal life. I have so many people saying that's infinite banking, isn't it? No, hard no. That is not infinite banking, and they're only literally using it so they can sell more policies that are more universal life. Those are the ones that are probably the worst to get into right now. Again, market highs is the worst time to get into universal life type of policies. It's better after there's a big market crash, then maybe going to those could be a good thing. Whole life is certain, it's guaranteed, you're never going to lose money. Universal life, you can lose money. Now, with other investments, right? What about real estate investing? Now, not all real estate is going to be safe, but this is the thing. We talk about food, right? People need food. People do need a place to live. That's always going to be the case. And so you try to look for the trends of what's going on. But here's what I tell people, like, one, I think rental properties are still going to be in demand. Now, the problem is they're not cash flowing well. So if your focus is you need passive income and multiple streams of passive income because maybe you have none right now, that's that may not be the answer to give you multiple streams of income, but it is a great place to protect your money. It also has a great magnification aspect because think about this. Say you have $100,000, right? You have it in the stock market, you lose 20%, you've lost 80,000. Now, what if it makes 20%? What if the market does go up 20%? Great. You just made 20,000 bucks on your 100,000, right? But real estate is different. See, if it appreciates, and say the 100,000 was a 20% down payment on a $500,000 property. Now, I'm not saying you should go buy a $500,000 property. I usually like less expensive ones, but I'm just doing this for sake of numbers. Well, here's the difference. What if the real estate market increases by 20%? So it appreciates 20%. You don't make 20% like you would in the stock market. Because remember, you put $100,000 down, but that $500,000 property used with the $100,000 down payment is now worth $600,000. Your $100,000 just doubled. You made 100% rate of return, not 20. You made 5 times it. Why? Because you did 1/5 of your money was the down payment. The other 4/5 came from the bank. You leveraged the mortgage. So one of the best things with real estate investing is the leverage aspect. So if you want to grow your money, I'll tell you that's a great place. And I'll tell you in a recession, buying properties, especially if you start to see some areas being hit hard. Like we've seen Texas, we've seen Phoenix, we've seen Tampa and Florida and different parts of there, definitely been hit already by real estate. Now I don't like those areas personally. I think they're a little bit too hot. And when things are too hot, I tend to stay away from it. I like the boring markets. I like the ones that are more secondary markets, which is why I usually look more to the southeast, not so much Florida, although there's some pockets that it could be good. But look in the southeast, or Midwest. There's even Indiana could have good properties. It could be Oklahoma, Missouri. There's still good places. Tennessee, right? We have some clients buying stuff in Tennessee right now, like in Eastern Tennessee. And so there's good places to be able to do that, to leverage your money and make more with it. The great thing is, I mean, it's very hard to lose money in rentals. Not saying it's impossible. It can happen. I've seen some people even the last few years, depending on the market they're in, where they haven't seen their property appreciate. And I don't expect a lot of appreciation here in the near future, but longer term can be a great place to preserve and really grow your wealth. Now, I do like things like lending. Lending my money right now has been good. Why? Because there's still real estate investors buying and flipping properties. There's still demand for real estate and they're willing to pay good money for it, especially where banks have been charging a lot of money anyways. They're willing to pay double-digit returns. So if you're looking for good cash flow, I've been doing more lending instead, where you can make 10, 11, 12% a year, maybe more on the money that you lend to these real estate investors. Now, you can either lend to investors or you can actually do funds where they lend to many investors, right? And it could even be more diversified into different types of properties too. Could be the same type, could be different types, but that's definitely been a great way to go. Other recession resistant things. Now, typically self storage has been recession resistant. And I think there might be seeing a little bit of a comeback there. And the reason why self storage can be recession resistant is because when people have to downsize, if it gets to be a really deep recession, which we haven't seen yet, when people really start to downsize, they can have a place to put their junk. Because for some reason, Americans have a hard time throwing stuff away, right? And so instead of getting rid of their stuff, they tend to just throw into a storage unit because they're too busy. They're too distracted by all the news and the media and social media and everything else in their lives. They're just busy, 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 busy people, and they just go throw their junk in self storage. That can be a good place to store cash, right? Again, you have to make sure you have the right operator. Just like with your lending your money, you got to make sure you have the right operators to use your money if you're going to be a passive investor. Industrial, we've seen industrial real estate actually do fine. I do believe that beyond like Amazon warehouses and whatnot, I don't know if that's a trend you're going to see a lot of buildup still. I think you might see some slowing there, but I do see that I think apartment buildings will come back because again, people need a place to live. Houses are getting more expensive. People might start looking more multifamily, and so I think that you'll start to see apartments that have already had a hard time start to get to a place where they get better. Again, typically you don't see that happen. The only reason we saw apartments get kicked in the teeth, along with some other real estate investments, is because they raised rates too high, too fast, right? It was just way too out of whack. That's why Trump's poo pooing all over Jay Powell, for being making bad decisions. The truth is they just procrastinated. They should have raised rates sooner, but they were so afraid about the post pandemic results that they said, well, let's just delay raising rates, and then they had to play catch up to where the rates should have been anyways. So that was part of the problem. They created a lot of stress because they waited too long, and that's typical of Feds. So, anyways, I don't want to get too in the weeds with this stuff, but I will tell you that recession-resistant investments definitely have been great. Land is another place that I've seen good things. So the truth is, really, real estate has been a great place. But what's awesome is that it depends on the kind of real estate. And by the way, if you listen to us a year later, I might have a different opinion because this does shift and move. There are different times when these things rotate where they might be better off than they are the other time. Like I was saying, the self storage is kind of getting there. It might be there in a year. It might be a great time to get in by 2026, right? But right now in 2025, what I'm seeing is that I like to store my wealth, right? And yes, I've bought gold and silver. I've already had gold and silver. I already had a storage of that. Well, I want to buy a lot more. Maybe, maybe not. And just so you know this, here's my kind of my general advice that I talk to my clients about. Until you're fully out of the rat race, don't worry about trying to buy things that like gold and crypto and things like that. That right there, like again, there's no cash flow in that kind of place, in that doing that kind of play here. So again, good way to place a store and create wealth. Even on the crypto side, yes, I said it. Like there could be a good place to store it, but even we've seen lately, it's not like gold and silver. Gold and silver is much different than crypto. Crypto has been following the stock market more than it's been following gold and silver. So just be aware that that's not always the best place to store your wealth. I'll reiterate this. If I'm going to store wealth, if I'm just trying to stay very conservative and safe, I'm going to keep it in savings, infinite banking, and food. Pure and simple. That's a great, easy place to start. But if I want to start growing my money, I start growing my money in places where people don't, that have been telling you not to be in, which has been lately, believe it or not, real estate. People have been hurt and burned even in real estate in the last few years. So even though, yes, it was a great ride, but then it came crashing down fast in certain spots, not all of it. I mean, I've had some real estate that did just fine and nothing happened. But there's other real estate like multifamily investing that did take a big hit that now we're starting to see the seeds for something greater to build some greater wealth. So again, I know it can be, there could be a lot of options there, but that's again where I keep my cash. That's where I'm storing my money. Again, keeping it more in real estate assets. I don't mind stocks, and you can do whatever you want with that. But the truth is that when it comes to that kind of thing, right now it's just way too high of a value. People have been in it. I think people are in denial right now. And the denial is always the phase that you got to be aware of because when people are in denial, that's usually when the market tanks the most. The people with the big money already pull their money out. They've been pulling it out even as we speak. That's already coming out. But the retail investors, the traditional average person, even the people that are trading stocks and options, the humans have been throwing money in kind of ignorantly, really in a way that's scary. And so that's the thing that I worry about. My biggest fear for you is that you choose to just sit and do nothing, think that you can just keep things moving the same way. And you're just, if you're in the stock market, you're not in a place where things stay the same. You're in a place where it's very volatile, very high risk, and completely 100% unpredictable. The only thing that's predictable about the stock market is that it's unpredictable. Is that where you think you should be putting your financial freedom? Well, that's up to you. I just know that for me and a lot of our clients, when the stock market crashes, we just smile and say, "Yeah, we're good. No problems here." And that's the thing that a lot of us that have real estate investments. And again, you don't have to be a genius. You don't have to know a lot, and you don't have to be the one doing all the work to be able to do that. You can be hands off investing in real estate. So, recession resistant investments. Be sure you have good liquid cash. Get lean, get liquid, and get out. And stop funding that 401k, especially if you've got debt or you're accruing debt. Stop doing it. If you don't have savings right now, build up that liquid savings. And then when you have more than enough to cover at least 6 to 12 months of expenses, then you look to get that money out to then invest in other places that are safer, that tend to hold their value even during a recession, which in the last 6 recessions, only one recession did real estate lose money. And that was the 2008 financial crisis when everything lost money. But other than that, real estate has held value well. That's a good place you can count on. And even better, it's a great place to create multiple streams of income, because that's the other thing to fight a recession, is to not have one stream of income from your business or your job. That's the riskiest thing you could do, because if you lose that business, you lose that job, you're on the streets. The best thing you can do to protect you and your family is have multiple streams of passive income. If you ever have a question on that, again, reach out to us at moneyripples.com. In the meantime, don't just sit on the tracks and get run over. Get off the tracks, and especially get off the track that everybody else is on, and do something that actually works. Go and make it a wonderful and prosperous week. We'll see you later.